Welcome once again to another session. Today we are going to be treating management accounting. So if you are, taking the ICA, ACCA, CIMA, this class is specially for you. So we will do it very quickly and very snappy as we always do it. And we'll dive into the lectures for today. But I just wanted to let you know that we have a YouTube channel, and this is the YouTube channel, So I would want you to subscribe to our YouTube channel and, hit the notification bell. The notification bell is right here. I've boxed it out with a red box. You can see it right there. So this is how our YouTube channel looks like. It has all the lectures you need, a lot of them, from financial management to financial reporting to strategy to audit to, and we are doing management accounting now. Everything you need is there. So, and if you need our slides as well, you just need to join our group, WhatsApp group and our Telegram groups, and you get all our lectures. Also, let me let you know that for the social media people, today everything is on social media. So we have a Facebook account and an Instagram account. So if you go on Facebook, you search for Pinnacle Professional College, and you search on Instagram, you search for Pinnacle Professional College, you should definitely see us. So just follow us as we post more content, more videos, more lectures to help you pass your exam. That is our goal. So what are today's objectives? Today's objectives, we'll be looking at accounting for management. We'll be looking at data information. We'll be looking at sampling methods and any other matters that may arise. So let's dive into the class. So one of the things that is critical when it comes to management accounting is having a solid basis. You will need to understand the premise for management accounting. And that's why it's important to treat data and information, the qualities of good information and all that, because it is critical to a good management accounting system in any organization. So please follow me as we go through the basics and the foundation. So first of all, let's understand what data is, what information is. So data, as you all know, is the raw material. That is used that is processed into information. So data is basically facts, original facts, events, and transactions as they've happened. The raw is basically information in its raw state. Then information, on the other hand, is data that has been processed to make it meaningful. Very, very key. Very, very key. It's very, very key. So for example, companies might have large sets of data, right? For example, if it's a telecom company, they might have the telephone numbers, like millions of telephone numbers, plus their average, their spend month on month, how much they spend month on month. And that's data, that's raw data. It's a lot of, events or transactions that have happened. But to make it information, you need to process that information. So processing happens where, for example, you group phone numbers into their average spend in a month. That means you've processed the data and you've made it more meaningful to the person who needs it. So information is more about communicating it in a meaningful way by processing raw data. Very, very key. And let's move on to the qualities of good information. Good information has to always be relevant, complete, accurate, clear. It should be communicated in a timely manner, and the costs should be less than the benefit. So you always need to do a cost-benefit analysis when it comes to good information. Very, very key. Very, very key. We will dive into each of these qualities to basically understand what they mean and how relevant it is for management accounting. So let's look at some of the qualities. First off, we talked about relevance, right? Information must always be relevant to the purpose for which your manager wants to use it. Must be very relevant. Relevant to the purpose, So a lot of reports, information out there, they fail to keep to the point. And there are certain things that are irrelevant, that are not important to the person who is using it, but it's still part of the information. Information has to be relevant to the purpose for which a manager wants to use it or the user wants to use it. It must be relevant to the purpose for the user. Very, very key. Otherwise, if information has extraneous material that is not needed, then it becomes, basically irrelevant to the one who is using it. Number two, completeness. Completeness is basically an information should be, holistic, holistic. It should have all the information that is required to do the job properly. It should be comprehensive enough. Information must be comprehensive enough. So if you are supposed to do a certain task and you need a certain amount of information, basically you should have all the information that's required. That is completeness. Then accuracy, obviously information should be accurate, because if you use wrong information or inaccurate information, it has very, very serious consequences. Very, very serious consequences. Then let's talk about clarity. Clarity. What is clarity all about? What is clarity all about? Information has to be clear to the user. The person who is using the information must understand it, because it's understanding that leads to action. So, for example, if you are reporting information to your boss and he doesn't understand it, he can't act upon it. So he needs to understand the information in order to act upon it. And it all comes from clarity. The presentation of the information, one, the medium you are even using to present, all those things are very key to clarity. Then confidence. Confidence is basically the information should have some credibility. The information must be trusted by the managers. What is the use of information that's not credible? No one wants to use information that is not credible. So the information must be trusted by the managers who are expected to use it. Very, very important. Then you also have communication. Within any organizations, individuals are given the authority to do certain tasks, and they must be given the information they need to do them. So information must be communicated. It must be communicated. Any organization where information is hoarded, it's not a healthy culture. Information must be communicated. It must be given out. Remember, we said that one of the key characteristics of information is to communicate it, in a meaningful way so that the user would benefit from it. Very, very important. Another quality of information is volume. Anytime you are giving out information, human beings have physical and mental limitations in terms of what they can read, what they can absorb, what they can understand. So if you are giving too much information, it cannot be handled. So you must have a balance in terms of volume, the quantity of information you give out, so that action can be taken easily. When you overload users with information and the volumes of information, it's just too much. It's not a good quality. Basically. Then you have timing. Timing is very, very key, right? And that's why the financial statements of a company are reported at a certain time, If you give information at a time that's not necessary, there's no use. Information must be provided at the time when decision is made or before decisions are going to be made. If the decision is taken already and you bring information, it doesn't really help anyone. Then the channel of communication. This is the method by which you communicate the information, right? The method by which you communicate the information. So, for example, there are things you deliver face-to-face. There are things you deliver through social media. There are things you deliver through a letter. The channel of communication here is key. There are things you deliver through email. So always remember this, that the channel of communication understand the channel of communication is critical to delivering information. So the quality of good information is that it understands the user. the person who's going to use the information, and tailors the channel of communication to their needs. Tailors the channel of communication to their needs. That's very, very critical to understand. You must know who you are communicating to and know the particular channel of communication that you are going to use. Then you have cost. As I said, you always have to do a cost-benefit analysis when it comes to information. So your cost should be low compared to your benefits, that you'll be getting from the information that you are delivering. Very, very important. Let's look at the relevance or the importance and the types of information. What's the whole purpose of information? I would say the whole purpose of information is decision-making. Summary. And that's what management accounting is about. It's about driving decisions. So you see how data and information is tying into management accounting? That's why I said you always need to understand the basics. The whole purpose of information is decision-making. People need information to make decisions. People need information to make decisions. It's very, very important. So that's the whole link between data, information, and management accounting. Management accounting is all about what? Making decisions. Then let's move on to the types of information. There are basically two types, and we'll add a third. The first type is financial information. Second, non-financial. And the third is a combination of both. And usually in organizations, you see a combination of both the financial and non-financial. So what is financial information? When we talk about financial information, we are talking about things of monetary value, right? Numbers, things of monetary nature. So examples of financial information might include cost of heating, cost of lighting, capital cost, etc. Then you also have non-financial. The non-financial information might include things like a management commentary on the effect on employee morale when, for example, canteen facilities are provided. That is non-financial in nature. So, for example, if management decides to build a canteen for their organization, what is the impact of that on employee morale? What is the effect of that on employee morale? Very, very important. Very, very important. So, non-financial things have to do with not necessarily the money side, but the non-financial bits, the non-financial attributes, the things that have an impact on the people, the staff, that are working for the organization, that are working for the organization. So, for example, something like employee morale, you can't really quantify it. You can't really quantify it. Very, very important. Then you also have planning, control, and decision-making. Let's talk about that a little bit. So information for management is likely to be used for planning, control, and decision-making. So what does planning involve? It simply involves establishing objectives and finding the appropriate strategies to achieve those objectives. And what is an objective? An objective is basically an aim or a goal. And we talked about strategy when we are defining planning, right? So a strategy, as we've said over and over again, is basically a possible course of action that will enable the organization achieve its goals. So a lot of organizations have, underlying objectives, which are quite similar. Is to maximize revenue, maximize shareholder wealth, increase market share, minimize costs. All these are objectives. And, all these things are basically targets that an organization will have that will help them reach their overall goals. Then let's talk about strategy and structure and the links between the two, strategy and structure. Strategy and structure. So there are two schools of thought, right? And these two schools of thought are quite interesting. The first school of thought says structure follows strategy. Structure, it follows strategy. The second school of thought says, please listen carefully, says strategy follows structure. Strategy follows structure. So let's consider the first idea, that structure follows strategy. What does this mean? It basically means that organizations develop strategies in order that they cope with changes in structure of the organization. They develop strategies in order to cope with the changes in structure of the organization. That's what we mean by structure follows strategy. So strategy takes the lead, because the organizations develop strategies so that they can cope with the changes in the structure of the organization. Very, very important. Then you have the second school of thought, which is strategy follows structure, which basically means that the strategy of an organization is determined by the structure. The strategy of the organization is determined or influenced by the structure of the organization. Let's take it again. First school of thought says structure follows strategy. Structure follows strategy. What does this mean? What does this mean? What does this mean? It means that strategies, are developed in order to cope with the changes in structure. Then we have strategy follow structure. What does this mean? It means that the strategy of the organization is determined or influenced by the structure. So very, very important. Two schools of thoughts. Always remember, structure follows strategy. Structure follows strategy. So it means that structure follows strategy. It means that the structure is influenced by strategy. Strategy follows structure. It means that strategy is influenced by structure. In summary, that's what it means. Then let's talk about levels of planning. In my lectures on strategy, I talk about levels of planning very extensively. So it's on the YouTube channel. You can go check it out and you would see it. If you type in Pinnacle Professional College Strategic Case Study, on YouTube, you should see that. You should see that. So we have long-term strategic plan, which is also known as corporate planning, which involves selecting appropriate strategies to achieve long-term plans. Then you also have short-term tactical planning, right? You have the short-term and tactical plan, which is basically breaking down the long-term plan into a series of plans that make it achievable in the medium term. Very, very key. So the long-term corporate plan serves as a long-term framework for the organization as a whole. But for operational purposes, to convert the corporate plan, into a series of medium-term plans, we need to develop what we call short-term tactical planning. So you are breaking down the long-term plans into, medium-term plans so that it makes it a lot more achievable, right? That's what you want to do as an organization. Now let's talk about control and decision-making. We've talked about planning and decision-making. Let's talk about control and decision-making. There are two stages in the control process. What are the stages? First off, the performance of the organization as set out in the detailed operational plans is compared with the actual performance. So the first stage in the control process is comparing the budget to the actual performance, the budgeted performance to the actual performance. And if there are any deviations, you take corrective action. That's the whole purpose of variance analysis, which we'll be talking about extensively in this class. So you compare the budgeted performance to the actual performance, and analyze the variances and take corrective actions where necessary. Very, very important. Very, very important. The corporate plan, the second stage in the control process, is that the corporate plan is reviewed in the light of comparisons made and any changes in parameters. There are things that happen in the environment, and there are changes that happen. So you constantly need to, assess your corporate plan and assess whether your objectives can be achieved. And if the plan has to be modified, it's modified so that it doesn't affect the overall goals of the organization. So that's also part of control. That's also part of control. Now let's talk about decision-making, right? Let's talk about decision-making because that's what we are here for. So management is decision-making. Managers of all levels take decision, and decision is basically making a choice between alternatives. and managers do that, as we've already said, through information and quality information. The more quality, the better the quality of the information, the better the decisions that are made. Even in your life, right? If you have quality information, you make better decisions. You make better decisions. So that's the whole purpose of management accounting. So what's the decision-making process? Let's understand how managers go through decision-making. So first of all, they identify the goals and objectives. That's what you have to do first. That's the first step. Then they also move on to identify alternate solutions, which might help them, or which might contribute towards achieving those goals or objectives that they've set. Then they collect and analyze relevant data about each alternative. They collect and analyze relevant data about each alternative. So first of all, they set their goals, they identify alternative solution, then they collect relevant data or information about each alternative. Then they make a decision. You have to make a decision. When you make a decision, you are basically making a choice. You are making a choice. That is what you want to go with. Then after that, you have to take action. You implement the decision. After you've implemented the decision, you don't just relax. You have to obtain information about the actual results from the decision you've taken. Then you compare your actual results with your expected outcome. You said that, oh, when I implement this decision, this is what I expect. And this is what I expect. Then when you actually implemented the decision, you get some actual results. So you compare your expected results with your actual results and evaluate your achievements. Very, very important. So these are the steps. You identify your goals, you seek out for alternatives, you gather information about the alternatives, then you have to make a choice, then you implement the decision, then you get information about the results from your implementation, and you compare your actual results with your expected outcome. Very simple process. Now let's look at Mr. R.N. Anthony's view when it comes to management activities. So R.N. Anthony was a leading writer on organizational control, and he suggested that activities of planning, control, and decision-making should not be separated, since all managers make planning and control decisions, So he's saying that planning, control, and decision-making are intertwined, and managers make all of them. They undergo all of them. He identified 3 types of management activities: the strategic planning, tactical control, and operational control, which we'll talk about in the next slide. So what does Mr. R.N. Anthony refer to when it comes to these levels that he was talking about? So you have the strategic, tactical, and operational. And again, we talk about this extensively in the strategic videos, or the strategy videos. It's fantastic. You need to understand it, and it will help you. So if you haven't looked at those videos, you can check them out, even if you're not a strategy student. So what are strategic plans? These are basically long-term plans, and they'll include matters such as selection of the product you want to go into. That is a strategic plan. The market you want to go into, the purchase of non-current assets. Those things are strategic in nature. They also have tactical or management control. Tactical or management control. It's more tactical or management control looks more into how you can, effectively break down your strategic plans for execution. So it's more concerned with the decisions around the effective use of an organization's resources to achieve the objectives that have been set. Strategic planning is concerned with setting objectives and targets. Tactical control or management control is concerned with decisions about the effective use of an organization's resources to achieve the objectives that have been set. Then the lowest tier, which according to R.N. Anthony, is that these levels, the last level would be operational control. Operational control. Operational control is simply the task of ensuring that specific tasks are carried out, effectively and efficiently. Very, very important. Very, very important. Very, very important. So operational control plans are set within the guidelines of both strategic planning and management control. So operational control is the lower tier. Which focuses on specific task, specific task to ensure that the decisions are carried out effectively and efficiently. So those are the three things when it comes to Mr. R.N. Anthony's view on management activity. So these are the types of management activity. So let's give an example to make it more relatable. Let's give an example of a strategic plan. A strategic plan will be that senior management, the top guys, will decide that the company should increase sales by, let's say, 20% or 5%. Then the sales director will make plans to increase sales by 5% in the next year. So first off, let's go back to strategic plan and give an example again. The senior management will decide to increase sales by 5% every year for 5 years. So you see, it's long-term, and it's done by senior management. Then now the sales director, based on this strategic plan that has been set, the sales director will come and say, okay, they'll make plans to increase sales by 5% in the next year with some provisional planning. So they'll do things like planning, sales resources, advertising, sales promotion, and so on. And they'll begin to assign sales quotas to each sales territory. All these things are tactical plans. You see, the strategic plan was very broad, 5% sales, increase in sales each year for 5 years. Now the sales director will break it down and say, okay, then we need to advertise, we need to promote, we need to get sales quotas for each sales territory. And that will be a tactical plan. Then let's move on to the operational, right? So the operational will say the manager of each sales territory, the sales director has mapped out all the sales territories and the sales quotas. Now the manager of each sales territory will now come and specify the weekly and daily targets for each sales representative. This is what we call operational planning, because individuals are given specific tasks which they are expected to achieve. So you see how it's fitting, everything is coming together. First off, you have a strategic plan, right? You have a strategic plan, which is long-term. Then they break it down into manageable units. Then they break it down further under operational planning to specific tasks. Very, very important. Very, very important. Then let's talk about a management control system. What is a management control system? A management control system is a system which measures and corrects the performance of activities of subordinates, in order to ensure that the objectives of the organization are met. So it's basically about managing the performance of activities of subordinates. And what's the overall goal? To make sure that the organizational goals are met. Very, very key. You are managing the performance of activities of subordinates. You are managing the performance of activities of subordinates. Very, very key. That's what the whole thing about management control system. Management control system. So what are the basic elements? The first element is plan. Plan. Always decide what to do and the results you intend to achieve. They have to record the plan. You have to record the plan. You have to carry out the plan, which is basically implementing the plan and measuring your actual results. They have to compare the plan, You have to compare the actual results with your expected results. Then you have to evaluate your results and decide whether any corrective action is necessary. If any corrective action is necessary, then you should definitely act upon that. So this is quite similar to the decision-making process that we discussed earlier. So management control system is a measurement system. It measures and corrects the performance of activities of subordinates in an organization in order to achieve the overall goals and objectives of the entity. And it has elements that we discussed: planning, recording, carrying out the plan. You have to carry out the plan. You have to compare your actual results with your expected results and evaluate it. And if you have to take any corrective actions, you definitely take it. So this is where we bring this lecture to an end. I hope you enjoyed this lecture. If you haven't subscribed to the channel, please do so. And I'll be posting a lot more videos for you. Our goal at Pinnacle Professional College is that you pass your exam with ease. So subscribe to this channel and I'll see you later. Have a good day. Thank you.